Hi students, one of the easiest way to score exemptions and clear your securities law subject is by getting the practical sums correct. Now the practical sums comes on an average of 10 to 15 marks in your paper, and this would be in the very beginning of your paper in question number 1. So now if you get the sums right, you will directly get 10 to 15 marks in the first half an hour of your paper, and it will also create a very good impression on the corrector. In this video, I have covered all the practical questions and all the different types of practical questions. Normally students only prepare few types and not the others, because of which they lose the marks. So therefore watch this video till the end, and the notes you can download from our Jahangir tutorials app. Okay, the link is given in the description. I have put up the notes along with all the subject scanners in the free study material section. So go ahead, download the notes, and please do all these sums. These are past exam questions which I have covered. Thank you. Now we'll be starting with a very important topic, that is your derivatives. Now, derivatives is a different segment of the stock market. So when you see your share market, everything as of now, what you must be knowing is of the cash market, is of the cash or the spot market. Where let's say if you want to buy shares of Reliance, you will go ahead and pay the money for Reliance and you will get the shares. You want to sell the shares, you can go ahead and sell the shares. Your account will be hit accordingly. Tell me one thing, if I buy shares of Reliance, do I become a shareholder? Yes or no? Yes. So that is all in the spot market. But in derivative market, when I buy Reliance, I don't become a the shareholder. I am simply trading on it. I am simply betting on it. The second segment of the stock market is your derivative market. Okay, derivative market. Now today I will try my level best to explain to you the derivative market, which people find it a little difficult, but it is one of the most simplest, interesting and the fun, and the most income is earned in this segment. Derivative market is further divided into few, that is your forwards, that is your futures, the other one is your options, and the last one is your swaps. These are four different sub segments of the derivative markets: forward, futures, options and swaps. Forwards are mostly concerned, okay, with other than securities, other than share market, could be your currency or could be your commodity. Clear till here? In this market, you are actually dealing in this future segment. Like you buy today at a and you fix the contract today for a future value. I'll explain. Next is your futures, which is much more standardized and regulated by the stock market. So this is about your stock markets. Here the lot size, how much you can buy, everything is standardized and fixed by the stock market. Next is your options. Options is of two kinds. One is your call option and the other one is your put options. And swaps could be swapping from fixed interest rate to fluctuating interest rate, currency swaps, or your interest rate swaps. But all of this is not important. Now what is exactly derivative? Let me explain. If you go as per the book definition, it says derivative is a contract. It is a contract whose value is derived. That is why it's called as derivative. It's derived from certain underlying asset, from certain underlying assets. Now this asset could be shares, it could be commodities, it could be currencies, it could be absolutely anything. So we are actually having a contract of kind of called something which you can relate to is betting on a certain underlying asset. Let me explain. Now I'll explain it in a very weird fashion first. Here the word derivative and how does it make sense. Derivative is very similar to betting, gambling. How they say, not gambling exactly, but how they say betting. Let's say you are betting on a horse race. You are betting on a horse race. There are 5 horses that are running. I bet on horse number 3. I bet on horse number 3. If I get it correct, if I get my bet correct, can I say I will win money? If I do not uh, get my bet right, can I say I will lose the money? Yes. Same way, in as I am betting on a horse here, what is the underlying asset of that contract? Whose value will be derived from these underlying performance of this underlying asset? समझ में आया? हम लोग दोनों ने कॉन्ट्रैक्ट किया. We have done a contract that I am saying horse number 3 will win. So here I have betted. I have taken a bullish position. I have taken a positive position on horse number 3. If I am right, I will earn. But if I am not, I will lose. Yes or no? Yeah. So this is nothing but a derivative where the contract value will be determined on the performance of certain underlying asset. Like in this case was a horse. We can also change the underlying asset and we can keep it as gold. Gold. So I can say gold का भाव बढ़ेगा. I can bet on gold and I can go for a bullish position on gold. If the gold value increases, the differential amount will be my gain. So let's say if I have now the gold, let's say is 42,000. Okay, gold value let's say is 42,000. And I have taken a buy position and the value has increased and it actually went higher to 45,000. Can I say the differential is my gain? Rupees 3,000 is my gain. However, if it turned out the other way around, that it just turned out to be 40, so again I would be in negative 2,000. So here the underlying asset was gold. Same way I trade heavily and it is a lot of fun. Commodities, they are currencies, even you can buy and trade on USD INR. Here the underlying asset is what? USD INR, currency. This is commodity. Even we can trade on securities, maybe on Tata Motors, TCS. I can bet that whatever share price is now here, it will go high or it will go low. I can take a bet. So derivative is a mere position that I take. I take a position, whether it will be a bullish position or it will be a bearish position. Is this clear? Yeah. So understand one thing, if I am bullish, that it will go high, Tata Motors so bhagega, then I will, that position that I take, anyone can tell me what kind of position is that called? Long position. You're taking a buy position. I'm buying Tata Motors. Tell me, in derivative when I'm buying, am I actually becoming a shareholder? No. I have just bought Tata Motors at 200 and 420. When Tata Motors will go at 425, I will sell it off. 5 rupees is my gain. I don't become shareholder. I'm trading. I am betting on this stock. If I'm bearish on a particular stock, कि यार अभी Zomato टूटेगा, so I will take a short position. This is called as a short position. Now understand short position. Again, tell me one thing. Am I really selling or I'm really buying? नो, आई एम मियरली टेकिंग अ पोजिशन कि यार जीतेगा कि नहीं जीतेगा, ऊपर जाएगा कि नीचे गिरेगा. आई एम टेकिंग अ पोजिशन. इट हैज नथिंग टू डू विद द रियल स्टॉक. इज दैट क्लियर? यस. मैं घोड़े पे बैठ कर रहा हूं तो घोड़ा जीतने के बाद मेरा होगा क्या? एम आई इवन कनेक्टेड विद द हॉर्स? No, it's just a bet on the asset that I'm doing. So the bet could be on anything. Now understand one thing and pay attention to this. If I've taken a short position on Tata Motors, I've taken a short position on Tata Motors. I have shorted it at 200. I have taken a short position. Short position means I am bullish or bearish? Bearish. I believe कि गिरेगा, इसके लिए मैंने short position लिया है. और actually market टूटा. Actually it fell to 190. So I had taken a sell position and I sold it at 200. So when it comes to 190, I will have a 10 rupee gain. Yes or no? So at 200 you sell. Now real selling नहीं है वो. It is just a position that we are bearish. Okay, so I'm not really selling the shares. I'm just taking a position that is going to fall. So I shorted at 200. More it goes down, the more benefit it is to me. If it starts going higher, that much differential will be my loss. And in the end, if I close the position at this, so I will square off. So this I had taken a buy position or sell? Sell. At 190 जब गिर गया तो then I will square off. It's called as a square off, मतलब opposite position कर लूंगा मैं. I will take a buy position. So in my trading book, it will look as if I have bought at 190 and I have sold at 200, and therefore the profit will be 10. Have you understood this? Yes. It has nothing to do with real shareholder. It is a position that people do, and it is a investment avenue, a different kind of investment avenue, just like Bitcoin is an investment avenue. This is also a different segment where analysts like to trade. Clear? So now that I have explained you what is bullish, bearish, and a brief idea, let's get into the real deal, direct sums. Now, what is a future contract? Future contract are standardized and then mostly talk about stock markets, etc. Where and why is it called as a future contract? Because I take a position today and the closing and all of that will be in a future contract. Yes or no? It's for future. So maybe I can even say that अभी December चल रहा है, तो I can take a Jan position. Okay, I can take a future contract. Jan का I can go for Tata Motors, and I can take a short position at 400. So I'm saying in future गिरेगा 400 के नीचे गिरेगा. अब देखेंगे फिर क्या होता है, and accordingly I will come to know whether I made a correct bet or a wrong bet. Let's read in this question what have they said and try to figure it out. Since you are new to derivatives, you might find it little this, but understand it's very interesting and fascinating and you should trade. Let's start. Akshay buys 500 shares of PQR Limited at 200. Now I'm showing. Now I'm going to show you strategies and techniques. Okay, so it's a little high level where intelligence is required. Akshay buys 500 shares of PQR Limited at 210 on stock exchange platform. Fine. This when he has bought a share. Can I say he has bought in the spot market? You take position in derivative. You buy share, actual share in spot market. In order to hedge is a mechanism of minimizing the loss. He sells 300 futures of PQR Limited at 195 each. अब टू हेज इसने बाय कर लिया. अब वो बोल रहा है गिरा तो उसको लॉस हो जाएगा, तो उसने एक opposite position भी ले लिया है in your PQR Limited derivative segment. Relax, I will explain. Due to the fall in the share price, so he has taken a position in the spot market also, in the derivative market also. The future price, the fall in the share price and the future price was 5% in share and 3% in this respectively on the next day. Akshay closes his position by counter transactions. Find out your profit and loss. चलो देखते हैं, बहुत ही सिंपल है. क्या बता रहे हैं ये लोग? Let me take this here. Okay. Now pay attention how you can do. Here you have your spot market and he has taken a future position also. And what is the name of the security that he is done in? What is the name of the script? Script का नाम क्या है? PQR Limited. This is a very good strategy what he has done. Even I do. Okay, and it is very very simple transaction. I'll explain in very simple terms to you. So he has done two things. पहले हम लोग first कोई समझते हैं. Baby thing he has done in the first, which you will know. You will relate to this. What has he done? He has taken a buy position. He's bought this. What is the value? 500 shares into 210. तो पहले हम लोग सिंगल का निकालते हैं, सिंगल इसका निकालते हैं. 210 का लिया उसने. Yes or no? He's bought a share of 210. Yeah, he bought it for 210. Fine. Now this has happened with me also. I bought a share of a particular company and my friend came in who's also an analyst and he's saying, अरे यार गलत कर दिया तूने, गिरेगा, ठुकने वाला है वो, गिरने वाला है, it's going to crash. Would you get scared as an investor? I get scared. I think, what the hell, I just bought it and you're telling me it's going to crash. Now I'm thinking, some analyst is telling me ऊपर जाएगा, some analyst is saying ठुकेगा. So in order to lower my risk, in order to hedge my position, I take a opposite position in derivative segment. I take a short position. I take a short or a sell position in. I told you, when I in derivative segment I go to minimize my risk. In derivative segment I go and I take a short position. Short position किस rate पे लिया मैंने? He sold at 195. Okay, at 195 he has sold. Now for example, if actually एक analyst का सही निकल गया कि crash हो गया नीचे, तो ये spot में मेरे को profit हुआ या loss? यहाँ पे क्रैश, तो यहाँ पे लिखा भी है कितना परसेंट क्रैश हुआ है. शेयर क्रैश एट 5%. तो 5% क्रैश हो गया. हम लोग ओ फ्रीक, इट क्रैश 5%. बट इन द अदर सेगमेंट आई एम प्रोटेक्टेड. अदर में तो मैंने बोला था सेल और उसमें एक्चुअली गिरा, बट उसमें ऑब्वियसली डेरिवेटिव में अलग सेगमेंट से गिर सकता है, रेट से गिर सकता है. सो दिस हैज फॉलन बाय 3%. सो हियर आई विल मेक अ गेन. So overall my risk is minimized by loss in one and profit in other. So I am hedging my position. I am setting off. So at different proportion hota hai. So I know in this case I will not have a big gain or a big loss since I am counterbalancing things. So iska calculation bhi nikala hai. 210 into 500. What is the amount? How much? Wait, I'll just multiply 500 into 210. Is this the amount? Yes. 1,05,000. So this is the amount he has invested. 1 lakh का माल खरीद, he has bought and it fell. It crashed. So -5% करो.
$199.5.
No, 1,05,000 minus 5%. How much is it?
99,750.
99,750. So his value became this much. यहाँ पे crash. But he had taken a opposite position in derivative segment and उसने 195 into 300 short किया. तो यहाँ पे अभी मैं 300 ले रहा हूँ. 195 into 300 कितना आ रहा है ये?
58,500.
58,500. अब इसमें उसने सेल पोजीशन लिया था. अब जैसे ये क्रैश हुआ, ये कितना परसेंट क्रैश हुआ? ये 3% क्रैश हुआ. तो इसको इंटू 3% करो, 580 whatever, और मे बी 58,500 माइनस 3% करो. 56,749. Here I will have a loss of the difference amount. इसका लॉस कितना है? This minus this, what is the loss amount?
5250.
5250. 5250. और ये दोनों का डिफरेंस कितना है?
1755.
1755 का प्रॉफिट है, बिकॉज उसने सेल किया था ये रेट पे और 3% गिर गया, तो ये रेट पे वो बाय कर सकता है, मतलब स्क्वायर ऑफ करेगा वो. सो इट विल बी काउंटेड एज इफ ही हैज बॉट एट दिस एंड सोल्ड एट दिस. सो सिंस इट 58 पे सेल किया उसने और अभी वही मार्केट में 56 का मिल रहा है. So this is a gain and this is a loss. So if he had not done hedging, he would have a loss of 5,250. However, since he has done hedging, because of hedging, his net loss is the difference amount. 5250 minus this. How much is that?
3495.
3495. Is this clear? तो बहुत ही सिंपल है. एक में बाय कर लो और ऐसा डर लग रहा है तो दूसरे में सेल कर लो. तो अगर एक में गेन हुआ तो दूसरे में लॉस होगा. सो ओवरऑल यू आर गोइंग टू बी इन अ वेरी सेफ जोन. Yes or no? So is these figures right what we have done? Net loss 3495, this profit is 1755 and loss is 5250. Am I clear till here? Yeah. So always remember that in these kinds of hedging sums, what is exactly hedging? In one market in spot market you must have done some transaction, and then in the future segment you must have done some opposite transaction. So if I have taken a buy position here, okay, let's say I had bought of 10 lakhs and here the market crashed. So something which I bought of 10 lakhs has now become 8 lakhs and I will have a loss of 2 lakhs. So in order that I don't have such a big variation, I also take opposite position in the future segment. Maybe in the future market I don't go for full this, I say 5 lakhs I will short. Now what is exactly short? Short, I told you, if I am bearish, I feel गिर गया तो मुझे फायदा होना चाहिए. If I feel that it will fall, so more it falls, more I will make. Yes or no? Because it is a position that I have taken of bearish position and my position was right. I said 5 से 5 lakhs के नीचे गिरेगा, तो 5 lakhs short position I will take. The more the market will fall, the more gain I will make. Is this clear?
Yes.
Yes. Now let's see. The next one is options. Now the next, so we are done with futures. Now we are checking options. Now option is also pretty interesting and one of my personal favorites. Let's understand what is options. There are two kinds of options. One is a call option and the other one is a put option. What does a call option offer? It gives you the right to buy but not the obligation to buy. So you have the right to buy but no obligation to buy. Put option gives you a right to sell but no obligation to sell. Is this clear? Option है ना, you have a right but not obligation. Call option is whenever I am bullish, I will take a call. Call option is a right to buy. So I get a right to buy but not the obligation to buy. So here whenever I am bullish, I will go for a call option. Wherever I am bearish, I will go for a put option. Is this clear? If I feel that Nifty will crash, I will go for bull or I will take a put or a call. Put option. Whenever I feel that the Nifty is going to crash, Nifty Bank is going to crash, Tata Motors is going to crash, I'm going to take a put position. Now it is little different from futures. Futures what happens? Unlimited loss हो सकता है. Futures क्या होता है? अगर गिरा ना तो गिरते ही रह सकता है और तुमको लॉस अनलिमिटेड हो सकता है. तो छोटे प्लेयर्स प्रिफर टू गो फॉर ऑप्शन. समझ में आया? Smaller traders who don't have much capital will go for options because अगर गलत जा रहे हो, अगर तुम्हारा पोजीशन गलत चला गया, तुमको अनलिमिटेड लॉस नहीं होगा. अंडरस्टूड? The loss will be limited. Loss limited होता है. Loss will be limited till premium amount. To take the call option or put option, you have to pay a premium. Anytime you want to take a call option or a put option, you have to pay a premium. That is the maximum amount of loss you can face. अगर मार्केट अपने फेवर में चला गया तो I am going to exercise the option and I will have a lot of gain. But if market goes against me and it has gone crash badly, I'll say नहीं, I don't want to exercise the option. मेरा premium amount forfeit करें. Is this clear?
Yes.
So as a newbie, as a new trader, you will go for futures or you will go for options. फ्यूचर्स में लोगों के 12-12, 15-15, 10-10 लाख लॉस हो जाता है, तो वो बड़े प्लेयर्स के लिए है. छोटे प्लेयर्स प्रीफर गोइंग फॉर कॉल ऑप्शन, पुट ऑप्शन. मार्केट ऊपर जा रहा है, बाय अ कॉल ऑप्शन. मार्केट नीचे जा रहा है, बाय अ पुट ऑप्शन. एम आई क्लियर? Now market was going down, I bought a put option and suddenly reversed and started going up. And it started going up abnormally high. So will I exercise the option? Put option. I'll say नहीं, put option तो कोई value ही नहीं रहा, कुछ मतलब ही नहीं है put option का. But loss can it be unlimited or till premium amount? Premium amount only. Okay. See, understand one thing. Why? You have a right. You have a right to buy. Here also you have a right to sell. ये right free में आएगा क्या? Anyone will give you a right for free. That if you like it, do. If you don't like, don't do. No. You're paying premium for this right. To get this power, you are paying the premium amount. Now understand this. There are in options, whether it be call option or put option, there are two parties. How many parties? Betting करते तो दो पार्टी होती है ना. If you are betting, there are two parties ना.
Okay.
The person having the right is called as the holder of the option, and the opposite person who will have to actually honor the contract is the writer of the contract. Holder has the option, is the holder of the right. Did he get this right for free? Did he get this right for free, or he has to pay premium? He has to pay a premium token amount. Writer has to follow instruction. Now writer is the opposite side. The writer is the opposite side. If I am taking the option and I am exercising, I am not exercising, my opposite counterparty is called as a writer. Since I am the holder of the contract, I have the right. If it is profitable, I will exercise the right. If it is not profitable, I will not exercise the right. Is that clear? The writer will have to follow my instructions, follow instructions of holder. Is this clear? Follow instructions of holder. Now, why do you have to follow the instruction of the holder? Because you will get premium amount. Now, tell me one thing. The market, okay, let's say if I have taken and it went in my favor, will you exercise the option? Will you exercise the option, yes or no? If the market starts going in your favor? Yes. So your profit can be unlimited. Profit can be unlimited. If the market goes high, I will exercise. I'll say, give me all the money. Aane do paisa. 30,000, 50,000. Aane do. It is the market turned in my favor. Option. But agar loss ho gaya, then I will say, is my loss unlimited?
No.
Loss is limited to premium amount. Is this clear? Because if it goes against me, I'll say नहीं करने का contract, कुछ नहीं करने का, जब premium amount रख लो. Is this clear? Now think, ये तो अपना holder point of view से, one party. Opposite party, that is a writer, his loss can be unlimited. His loss can be unlimited, yes or no? Because if his profit is unlimited, this guy will have to pay, na? The writer will have to pay if the holder exercises the option. So this loss can be unlimited. And the maximum profit, max profit of this writer is what? Premium amount. So whenever it is going in my favor, okay, going in the holder's favor, he will really exercise it and say that pay me money. So I will have to keep paying him. But whenever he is wrong, he really runs away and he says, I will not pay more than premium. So tell me, it is more advisable to be holder or writer?
Holder.
So always all these newbie are there. All these traders in the market are always holders. But you think anyone will become a writer then? You think anyone will become a writer? Huh? Profit is limited to premium and loss is unlimited. You think anyone will become a writer? Yes or no?
Okay.
Here, understand one thing. Imagine how bloody confident these people are that they are still taking a position. These could be FIIs, these could be institutions, these could be some hedge funds, or quietly these could be certain insiders. trading? Who can be so confident that चलेगा ना 10 रुपये आएगा ना आने दो चलेगा 10 रुपये लॉस अनलिमिटेड बेयर कर लेंगे बट 10 छोटा छोटा अमाउंट करके ये सब है ना मेजॉरिटी में लूज करते they all lose the money to the writers because the writers are the ones who are so technically sound and they have so much money in place that they really know where the market is going. Am I clear till here? So if someone is becoming a writer, they are bloody confident about what is going to happen in the market. Am I clear till here? Yeah. So obviously it is a zero sum game. Pay attention to this word. It is a zero sum game. Means what a zero sum game means? Loss of one is equal to the profit of another. Yes or no? That's how betting works. I lose, you gain, you gain. Can we both win? Zero sum game means loss of one is equal to the profit of another. Someone has to lose, someone has to win. Clear till here? Now this was all the theoretical part and now comes to your implementation of the knowledge. Let's see. I will solve it for you. I will make a certain format. You can also do that. Let's pay attention. Okay. What are option contracts? So option contracts gives the holder the option to either exercise the contract, and if he does, and to get this right, he has to pay a premium amount. Always the holder has to pay a premium amount. Compute the profit and loss for each investor in following contract. Now, when I say I am buying a contract means I'm the holder of the option. But if I say I am writing a contract means I'm the writer of the option. Is this clear? The holder buys the contract and the opposite party is called as a writer. Writer writes the contract. Is this clear? Or he sells the contract. Am I clear till here? These are just terminologies. अभी हम लोग देख रहे हैं बहुत ही सिंपल है एक बार once you get a hang of it full marks you can get full marks. Let's read. Mr. X writes a call option to purchase a share at an exercise price of rupees 60 for a premium amount of rupees 12 per share. Share price rises to 62 at the time of the option expires. Now, for each one, you will make a presentation something like this. Answer. You will first write whether he is the holder of the option or the writer of the option. What is he?
Writer.
Writer of option. Then you will write which option. So he is a writer of a call option. This is your title. Then let's see. There is something going to be a strike price. A strike price. Strike price is also called as the contract price. That this is the price that is really, because now I will do at a price and then in future I will compare yes or no with one price. अभी कोई तो प्राइस होगा ना जिसपे मैं अभी से ही कर रहा हूँ. फॉर एग्जाम्पल आई गो एंड बाय अ कॉल ऑप्शन ऑफ 19,000 rupees. Now, so that is the strike price. Contract price. Contract price is how much? It is also called as exercise price. It is also called as exercise price. अभी starting में सब लिख रहा हूँ. You should know it, okay? Exercise price. Trust me, it is the most simplest and the most boring. Exercise price is how much? Rupees 60. Abhi premium, if he always premium is to be paid, yes or no? Premium amount. Premium amount is how much? Rupees 12. Is this clear? Now we are going to write what is the date of expiry price. The expiry price means at what price did it really terminate? Contract कितने में खत्म हुआ? Expiry price or the market price in the end. I'll compare na market price at end कितना था? Market price at end. That's why it's called as the expiry of the or contract when it expired. What was the price? What is the expiry price? 62. 62. Okay. Now always whenever you're doing from writer or anything, you always have to think from holder point of view, because the holder is going to take all the calls. So think from holder point of view. Holder क्या करेगा? Because मुझे तो खाली सुनना ही है. So always remember, whenever you're starting, you have to think from holder point of view. Tell me execution of the contract, whether he will execute contract or not. Let's see. What kind of an option it is? Call option. He has a right to buy. This is a strike price, or he has a actually predetermined price. He has a price. He can buy it at 60 rupees. He can buy it at 60 rupees. Market price turned out to be 62. But he has a right to buy it at how much? 60. So will he execute the contract? Answer is yes. The person will exercise the contract. Why? Because he had a right to buy at 60 and it turned out to be 62. So he will execute the contract. Then what will happen to the profit and loss? Let's see. Profit and loss. So difference amount is his gain. However, the holder will always have to pay a premium amount. Premium amount is of rupees 12. So therefore, it will turn out that the holder, has made a loss of rupees 10. Yes or no? 62 की चीज है. He can buy it at 60. Will he buy? Yes, he will make a gain of 2 rupees. But premium amount was there of 12. So ultimately, if you net off, you come to know it is 10 rupees loss. If he had not exercised the contract, तो 12 rupees का loss होगा. So better to exercise, at least कुछ तो profit आ रहा है. Yes or no? Now he has a 10 rupees. The holder has a 10 rupees ka loss. Now whenever you're doing from you have to think from holder point of view. So holder has made a loss of how much? 10 rupees. That means the writer must have made a profit of how much? Being a zero sum game, exact opposite, 10 rupees. So you will just change the sign in the end, that if the holder has earned profit of 2 rupees, the writer will have a loss of 2 rupees. And since the holder had to pay 12 bucks, this guy has got 10 rupees in his pocket, and ultimately this guy has got 10 rupees. So this is the writer's answer, 10 rupees in hand. Is this clear? Now don't worry, when we practice a little more, you will come to know. So this I'm cancelling. I'm going to the next question. Is this clear? Now don't jump to the conclusion directly. When we do second, third, fourth, it will get better with time. Now first one I've explained. The writer makes a profit of 10. Next. Now next one I want you to try. Mr. Y buys a put option. Whenever someone says they bought a put option, that means he's a holder of a put option. Is this clear? He is holder of the put option. Holder of put option means he has a right to sell. अब देखते हैं. Strike price कितना है? Strike price is rupees 80 and premium amount that he has to pay is rupees 8.5 per share. Share price falls to 60. So let's see. Expiry price कितना हो गया? Expiry price. It turned out to be 60. What is, will he execution of contract? Will he do the contract? Yes or no? Now pay attention how it is. Remember, this means इतने की चीज है. This is the value. This is the value. इतने की चीज है. 60 की चीज है. He has a right to, ये put option is for what? He has a right to sell it at 80. Will he exercise the price or contract? Yes or no? something which is worth 60, he can sell it for 80 rupees. Will he exercise the contract? Answer is yes, he will exercise. So what will be his profit or loss? So it is worth 60, but he can sell for 80. So he will make a gain of 20 rupees. But since he is the holder, he always has to pay premium of 8.5 rupees. So can you tell me what is the difference amount? 11.5 rupees profit. Understood till here? So here it will be 11.5 rupees profit. Okay. Now let's take another example. Slowly you will get. Don't jump to conclusions. Okay. Next, Mr. Z writes a put option. So again, I will say what is he? So he's a writer of a put option. Writer of put option. Whenever it comes in the exam, it comes for writer. You will always think from holder point of view, and in the end, you will change the signs. So first, again, exercise price is how much? Rupees 80. What is the premium? Premium is rupees 11. The price rises. What is the market price in the end? Market price rose to 96. Tell me whether he'll execute or no. Now let me think again. 96 की चीज है. The value is how much? 96. He has a right to sell. This is a put option. He has a right to sell for 80. Will he sell? 96 worth thing, he can sell it for 80 rupees. Will he sell? तुम 96 की चीज बेचोगे 80 में? So answer is he will not execute. He will not execute. So therefore he will say nahi, I don't want to do. So no profit, no loss. Difference is nothing because he didn't execute, but he just has to pay the premium amount. Premium amount is how much? 11 rupees. So the holder is having a loss of 11. I told you, since this is a writer, you will in the end, is table ka you will change the sign. So since you made a loss, holder made a loss of 11, this guy will make a profit of 11 rupees. Clear till here? One last time, we'll take one more example. So this is a profit of 11. Now slowly you should get confidence to solve it. Let's see. XY writes, so he is writing a put option. Put option write किया है. ठीक है. आगे. Exercise price is rupees 70. Premium is rupees 8 per share. Market price in the end turned out to be 40. अब समझते क्या सीन है. एग्जीक्यूशन से चालू होता है अपना अंडरस्टैंडिंग. 48 की चीज है and he has a right to sell it at 70. This is the right to sell. Would you want to sell something worth 48 for 70 rupees? Yes or no? Would you want to sell something which is worth 48 for 70? Answer is yes, you would want to sell it. So if we sell, this difference amount is a gain. So profit and loss is what? Difference. So 70, you have your 70 minus 48. So 22 rupees gain. But the holder has to pay premium that is of 8 rupees. So you will have 22 minus 8. So it is 14 rupees. Now since he is the writer, we have to change the sign in the end. So we will say that since this guy holder has earned 14, that means I have lost 14. So I will change the sign and I'll say 14 has been lost. Have you understood till here? So again, to simplify, you always have to remember one will be a expiry price, the exercise price, one will be the premium, and one will be the market price in the end. You have to compare this, look at what kind of an option it is there, whether it is a call option or a put option, and then you need to see whether the person, always think from the holder point of view. If they've asked from writer point of view, do from holder point of view, and in the end change the sign. Now we'll be seeing a different kind of options how they are given, where they've directly given you the values, which looks very complicated, but in reality these kind of sums are much more easier and simpler. Here let's read. Nifty index was trading at 11,025. Put option was available of 10,800 with the expiry price was available for rupees 50. So one put option ये contract का buy करना था 50 का rate था, so it was for 50 rupees. Call option at 11,300 was available at 30 rupees per lot. So call option of this 11,300 was going for 30 rupees. Nifty lot size was of 75, so this was per lot. In one lot you have 75. Ganesh, who was a regular trader, bought 2 lots of put at this and one lot of call option. So here what are they saying? He has bought call options also and put option also. So let's see what is his gain. So direct sums have been given where we are going to find out the payoff on call option and a payoff on put option. First they have told that he has bought a call option for rupees 30 rupees per lot. तो call option उसने 30 rupees का लिया है into 75. You will come to know that this was the total value invested. How much was the amount? Can you tell me? Okay, so maybe we'll go in this fashion that 30 rupees per lot. अभी ये जो उसने call option buy किया 30 rupees का, I want to see उसने कितने में sell off किया. So at the time of squaring off, the call option could be sold at 80 rupees and put option could be sold at 5. So what he has bought for call option was bought for 30. He could sell it for 80. So what he had bought for 30, he can now sell it for 80. That is 50 rupees gain into 75 per lot. So how much is the amount?
3750.
3750. Let's see for a put. Now put ka payoff. Now put option at this contract was available for rupees 50 per lot and he has bought 2 lots of put. So he had bought it for 50 and then the put option was later sold at 5. So something which he has bought for 50, which he had bought for 50 is being sold for 5 rupees. So 45 rupees ka loss he has faced and he has taken 2 such lots. So that is 90 rupees ka loss into 75. So that's how much?
6750.
So 6750 का उसका loss. So he has got a profit on a call and a loss on a put. So net loss होगा उसका how much? 3000. Now you have to understand that he has bought 1 put and 2 call. Yes or no? So here they have said that calculate the net loss and profit. We found that, and considering the transaction charges including brokerage is fixed at 100 rupees per lot. So he has done 3 lots, right? 2 put and 1 this. So 100 rupees per lot. So we'll also have to subtract 300 rupees from this because as transaction cost, brokerage. So therefore the net loss will be 2,700 rupees. Is this clear? So this sum, though it looks very complicated, is very simple. You bought it for 50, you sold it at 45. Or you bought it for 50, you sold it at 80. So just the difference amounts you can calculate and tell whether what is the profit and the loss. Now we'll be starting your takeover code and the questions that have been asked. Now in your exams, they have actually asked you multiple times your enterprise value. Now what is exactly enterprise value and how is it coming under the takeover code? So Enterprise value is talking about the value of a company. When I go to purchase it, when I go to acquire it, how much do I need to pay for it to acquire the company? So if I just go it in words form, enterprise value equates the amount that it would cost you to pay every single one, okay, your shareholders, equity shareholders, your preferred shareholders, your outstanding debt. I would have to pay all of them to purchase the company. Yes or no? Only thing, the cash will be subtracted from the to get the enterprise value. Why is cash subtracted? Because that's mine. I don't have to pay it to anybody. So that would help me, because you would have the, once you have acquired the complete ownership of the company, the cash is actually ours. So we subtract it. We don't have to pay it to anybody. Let's understand in simple little words. एक कंपनी मेरे को बाय करनी है. If I want to buy a company, would I have to pay all the equity shareholders? Yes or no?
Yes.
And I will have to buy them out at a current market price. Yes or no? So whatever is the prevalent market price, I have to buy all of them. Second, there must be certain lenders. I will have to pay them also. Yes or no? The company must be having certain creditors. I will have to pay them. Yes or no?
Yes, sir.
Even certain other minority shareholders must be there. I will have to pay them also. That I give me this company, I want this business, I am ready to purchase every single one. So I'll pay all the equity shareholders, I'll pay the creditors, I'll pay the preference shareholders as well. Now the company has cash. Let's say the company has cash. Normally the cash is an asset, but this cash what is there that the company is having in the bank account, isn't it good for me? Isn't it good for me that the company the target company has cash in its bank account? It is good for the acquirer or no? It is good for the acquirer or no? So let me give you an example. You will understand it better. Let's say I want to acquire. This is my target company. This is my target company, and I am the acquirer. So I find out what is the market price of the equity shareholders. I came to know it is 2 crores. I said 2 crore दे देंगे. Debt कितने का है? 1 crore. 1 crore दे देंगे. Minority shareholders, let's say of 1 crore दे देंगे. Equity shareholders of 2 crores. ठीक है? यहाँ तक. So how much I will have to remove to buy this company? To buy this target company, how much money I have to remove to buy this company? I have to remove 2 plus 1, 3, 4, 5, 6. 6 crores to buy this company. Yes or no?
Yes.
Yes. So this is the enterprise value that I need 6 crores to buy out this entire company. Now when I buy out, I'm going to see that the company, this target company already has cash with it. It has a cash in its bank account of 1 crore. Now tell me, do I need 6 crores to buy this company? Now I'll require only 5 crores. Now I will require 6 crores or 5 crores only.
I see.
Because this cash becomes mine, na? This cash becomes mine. So I will use this only. So the enterprise value is actually from the takeover point of view, the acquirer point of view, that this target company, how much it is going to cost me to buy it. So it will cost me 6 crores or 5 crores.
I see.
5 crores, because I'll pay off everyone, and whatever cash is there is actually mine only. So that will I'll really use it to pay off all these people only. So it ultimately reduces my purchase cost. So therefore cash and cash equivalents are subtracted. Is this concept clear?
Yes.
Yeah. Now quickly we'll go through the sums once you know that why cash is subtracted. बिकॉज कैश तो अपना ही हो जाएगा बाद में, वही यूज कर दूं पे ऑफ करने के लिए, तो मेरा तो खर्चा कम हो गया ना. अब क्विकली इसको we'll do the sums. Enterprise value in case of takeover code. Calculate the enterprise value. ठीक है. Equity shareholders outstanding 1,60,000. Now this is equity share capital of this much per share. Now you have to understand one more thing. What is the market price I need to compute? Market price on the closing day is this much. Reserves and surplus is of this much. Minority interest is of this much. Preference shareholders are of this much. Cash and cash equivalents are of this much. And current assets are of this much amount. Now, what am I going to do? I'm going to say what is the market enterprise value. It is a market capitalization. Now, market capitalization, first I have to see this what is given here is in the balance sheet. Yes or no? The equity share capital is in the balance sheet. Is it reflecting the book value or the market value?
Book value.
This is the book value. Books में इतना mentioned है, मेरे को market price से multiply करना है. So first I will require the market price. So market price is 125 into the total number of shares. Number of shares. I'll come to know the market value. Yes or no?
Yes.
So once I do this, I'll get the market value. So market price into the number of shares. Number of shares कैसे ढूंढेंगे? इतना value है and one share is of 2 rupees. So if I divide this, I will come to know how many equity shareholders are there. So I'll come to know that there are 800 equity shares of rupees 2 each, multiply करके 1600 lakhs का value. So how much is the number of shares? Can anyone tell me?
800.
800 lakhs. So the very first thing is you have to compute the market value. From the book value, you divide the number of the par value, the face value. You will come to know the number of shares. Number of shares into the market price will give you the market capitalization. So once this is done, then I require the debt amount. What is the debt? I'll have to pay the debenture holder, the creditors also. It's given? No debt in the company. No debt. Zero debt. Then do they have minority shareholders? Yes, minority shareholders. They also have preference shares. And cash equivalents will be subtracted. No other adjustment is needed. Formula is this only. Clear till here? So I'm buying off all the shares and whoever the owners of the company. So the market share capitalization is 800 lakhs into 125. So this plus all of this minus cash and cash equivalents is your enterprise value. Cash and cash equivalents will be used to subtract it. यही पैसा यूज कर दूंगा उनको पे ऑफ करने के लिए, तो ये माइनस हो जाएगा. Yes or no?
Yes.
Yes. Next, I need the market capitalization. This ये जो है book value है कि market value है?
Book value.
Book value. This divided by this amount will give me the number of shares. Number of shares. This I will multiply with the market price, which will give me the market value. तो भी market price दिया होगा 96, तो इससे मिल जाएगा. Multiply come to the market value. Then I will have to pay off the minority shareholders. I will have to pay off the short-term borrowings. So I'll add up all of these things who I have to pay off, and I will use the cash to pay off to the people. Okay. So enterprise value is given. We find out first the market value, and then we do the calculation. Clear till here? Now is another type of questions for your SEBI takeover code, that is SEBI substantial acquisition and of shares and takeovers regulation 2011. It's mostly talking about an escrow account. Whenever the acquirer, let's say there is a acquirer, he wants to acquire the target company. Target company को buy out करना है. क्या था clear?
Yes.
अब obviously he wants to buy out. So what happens? There is a merchant banker appointed. Merchant banker is the SEBI person. Okay, he's a intermediary of SEBI who will tell the acquirer to set up a escrow account and to deposit funds in this escrow account to see whether he can honor his paying off responsibility or not. मैं भी जाके बोल दूंगा I'll buy out Mukesh Ambani. In the end, when they tell me to pay, I say I don't have. So that shouldn't happen. So and also that I take it seriously. Before I make this kind of I proceed further. Certain amount of funds is to be deposited in the escrow account. Is this clear? Yes. अभी देखते कितना क्वांटम है तो पहले हम लोग को लॉ देखना पड़ेगा. So it says first this is again a legal sum. Once you know the law then it's very simple. So acquirer must create a escrow account not later than 2 working days prior to the detailed public announcement. So before he gives the detailed public announcement he has to give a set up an escrow account. Now escrow account mein how much he has to deposit? On the first 500 crores, so whatever he's going to buy out the company, we'll come to know what is his offer size, what is his offer price. Accordingly, we can compute how much liability aa sakti hai. If I am going to buy out Reliance Industry, so someone can compute how much my liability can be. So for the first 500 crores, or I can even go to buy out a small company. So smaller company का escrow account में कम figure जाएगा because उसमें requirement भी कम होगी. So for the first 500 crores, I have to deposit 25% consideration, and for the balance consideration, additional 10% has to be given. So let's say if a company is there and I find out that my liability is 200 crores, so I just have to give 25% of 200 crores. But if I come to know it is 700 crores that my liability can be, so the first 500 crores I will give 25% of 500 crores और जो excess है okay for the balance consideration तो 700 crores और 200 crores का 10% मेरे को additionally add करना पड़ेगा. तो देखते sum में ये उसका law है. This you should know. So whenever we are doing legal sums you will have to go back to the chapter, learn the chapter, know the law. Here it is a sums, the practical aspects. पढ़ लेते. Romeo International Limited is listed on the Bombay Stock Exchange. Good. On Friday, one of the shareholders, Ganesh, who was already holding 30% stake, made a public announcement for open offer for acquisition of 13 crores equity shares, constituting of 26% of the capital of Romeo Limited. So this guy who was holding 30% says, I want to take more additional this much 13 crore shares, and after which he was triggering the open offer. Offer price that he was giving is at 500 rupees. So he's giving 500 rupees also. He's ready. He's an offer to the shareholders of the target company that I'm giving you 500 rupees. How many of you all want to sell? Now let's see what is the question. What is a time limit for depositing? So again we saw not later than 2 working days prior to the detailed public announcement. Escrow account has to be created. So very simple. And what amount should be deposited? Again, for 500 crores, up to 500 crores, 25% should be given. For amounts beyond 500 crores, for the first 500 crores, you will give 25%. For the amount beyond 500 crores, you will give 10%. Explain the various forms of maintaining escrow account. तो बहुत ही सिंपल, ये तो जनरल सम ही था. यहाँ पे हम लोग देख रहे हैं consideration payable. Okay, so they are calculating also in the showing. He wanted to buy additionally 13 crore shares and he's giving 500 crores. So we can compute how much can be his liability. Yes or no?
Yes.
So 6,500 crores he should have. So now how much he should have in the escrow account? First 500 crores ka 25% and for the balance that is 6,000 crores 10%. So adding up you will get 725 crores. And in the escrow account, do you always have this? Acquirer always has to deposit cash. He can even give cash equivalents. Cash he can also give. He can deposit some shares worth. He can pledge his shares. or he can get a bank guarantee. A bank will guarantee that this much amount he will pay. If he doesn't pay, we will pay. So, or a combination of all of them, escrow account can be made in these kind of forms. So, in the escrow account, you can deposit cash, you can get a bank guarantee, or you can deposit shares. Hi, we'll be covering the SLCM securities law or SEBI sums and practical sums. In your exam, around 15 to 20 marks of sums come. What I have done is I have compiled all the possible exam questions that have come and that can possibly come in your exam and brought it down under one head. So in this, whatever sums I'm doing is the ones which will possibly come in your exam. So take a printout of these notes and solve these notes. I can guarantee you around 15 to 20 marks will be very easily achievable if these type of sums land up in your paper. The first type of sum that we'll be doing is your related to mutual funds. The sums and whichever sums which I'm going to do now, all of this is to be done after you've studied that particular chapter. So only then you will be able to solve the practical parts, because I'm not going to explain the concept. Now, the very first part to know is something called as NAV. Now, what is a NAV? Net asset value. Here we'll be computing in the sums, in exams they can ask you compute the NAV of a mutual fund, or they can ask you at what NAV will the price be taken. So first let's understand what is a NAV. Like we invest in companies, right? So we invest in a company. Let's say for example I invest in Reliance. So the share price, I will, whatever market price is going on, I would buy at that. So that is called as the share price. Yes or no? Same way for mutual funds. You don't have something called as a share price. You have called as NAV, net asset value, which is showing the value of one unit. Same way as this shows the value of one share, this shows the value of one unit. In a company, there are shareholders. Whereas in a mutual fund, there are unit holders. So for example, if today I want to buy Aditya Birla Mutual Fund, so I will go and check what is the NAV today, and at that NAV I can buy my mutual fund unit. Clear till here? So NAV is actually the market value of the security. One security is for how much is the NAV. Now in a company, the share price is continuously till 3:30. We see the market price moving out. Yes or no? Share price going up, share price going down continuously throughout the day. The share price is declared. Yes or no?
Yes.
Yes. But for NAV, it is not declared throughout the day. It is declared at end of the day. At end of day, the NAV will be declared. So at any given point of time, you will not come to know the NAV. It will only come to know after the market closes for a mutual fund. Has this difference been clear? So unlike stocks, where the prices are driven by market changes and continuously changes from minute to minute, second to second, mutual funds don't declare their NAV throughout the day. Instead, NAV of all mutual fund schemes are declared at the end of the trading day after the markets are closed. Is this clear?
Yes.
Yeah. Now there are two types of sums that come in. One, they will tell you find out the NAV of the sum. So let's see how the NAV is calculated. Very simple. Net asset value. It is the net assets divided by total number of outstanding units. Okay. So let me explain. Here you will see the net asset of a value. Now how do you calculate this net asset? नेट एसेट्स कैसे मिलेंगे? सो कैन आई से इट विल बी द total assets of the mutual fund wherever they must have invested. If a mutual fund takes money and then further invest in various companies, yes or no? So we have seen so many top class mutual funds prefer to invest in TCS, prefers to invest in Infosys. So the total assets will be the market value of all those investments, yes or no?
Yes.
Yes. So सिंपल सी बात है, अगर म्यूचुअल फंड ने 15 करोड़ इन्फोसिस में डाला है तो 15 करोड़ के एसेट्स है. जैसे तुम इन्वेस्ट करोगे तो तुम्हारे पास एसेट्स होंगे. सेम वे म्यूचुअल फंड wherever they invest are their assets. So if they have other kind of receivables, any kind of income or any kind of assets, all of that will collectively give my total assets, yes or no? So
Yes.
yeah, so the market value of investments keeps changing. So can I say the total value of total assets also keep changing? Because if mutual fund has invested in Tata Motors and the Tata Motors share price has shot up, so the mutual fund NAV will also go up. So once you take the total assets, then do you think the mutual fund has only assets or they must be having liabilities also, expenses also? So when I deduct the total expenses or total liabilities, whatever is the net figure is my net assets, yes or no? So I will subtract the expenses, payables, other liabilities. So all of that will be subtracted. After doing that, let's say they had investments of 30 crores, out of which they had outstanding expenses of 3 crores. So what is the net asset of the mutual fund?
27.
27 crores. Now we are going to see that this 27 crores is available as net assets to all the unit holders. सबको मिलेगा 27 crores collectively. तो हमको देखना है individually per person how much do they get. So let's say if the so we are saying we are going to divide this because 27 is for available for everyone. I want to know how much one person will get. So I'll have to divide with the total number of units. How many units are there? So that way I'll come to know one unit will take how much. So let's say if I come to know that there are 1 crore units, 1 crore unit holders, each one holding 1 unit. So each one will take home how much? 27 rupees. Yes or no? This is your NAV for the day. Clear till here? So what is the NAV? NAV is nothing but the net assets where you take all the assets minus the liabilities and divide by the number of outstanding units. How many units are there? So that way we'll come to know per unit how much is there. Clear till here? This is the simple calculation for NAV. Now we'll see this with the help of a few examples. And one more thing you have to understand with the timing. So this is the NAV calculation and second is the timing. Timing means what? Let's understand. The cutoff timeline. Now this is important again. So NAV cutoff timeline. Tell me one thing. Is the NAV declared throughout the day or it is declared per day after the market closes?
After the market.
After the market closes. Okay. So they have divided it for equity and debt. Timing is being set as one thing. For the cutoff timelines is for equity and debt funds in a certain fashion and liquid funds in a certain fashion. So let's understand first what it is, then we'll understand it much better. So first we are going to see equity oriented and debt funds. These are the most common and most famous kinds of mutual fund. Equity oriented. I take your money, I invest in equity. debt oriented, I take your money, the mutual fund will take your money and invest in debt instruments, debentures, fixed income securities, etc. Liquid funds are those funds, those mutual funds which collect your money and they will invest in liquid assets which can be converted into cash any point of time. For example, government securities. So they will invest mostly in the money market, RBI bonds, etc. We don't have to get into that. We just have to understand what are the cutoff timelines. Okay. So let's understand this. Twice exams, in the past year they have started asking this type of question. So let's see. If I have purchased, so maybe I have purchased of a value of less than 2 lakhs. I have purchased of a value of less than 2 lakhs. Or if I have purchased equity oriented funds or debt funds as a switch in. Now what is a switch in? It is also like a purchase only. So certain mutual funds, they allow switching of the scheme. Switching of the scheme 1 to scheme 2. So if I've gone from scheme 1 and I've switched into scheme 2, can I say I have purchased scheme 2? Yes or no? I've switched into one thing, so obviously I must have purchased that. So it has the same effect. You have entered into one scheme. Either I have purchased it directly or I have come as a switch over into from another scheme. Both effect is I am getting the units of one scheme. Is this clear? I am purchasing. Now if I am purchasing up to 2 lakhs, what is the scene? Before, so I have done the transaction, let's say before 3 p.m. It is not exactly before, but it is at or before 3 p.m. Means I have purchased at 12 o'clock. I have switched into one scheme or I have purchased one scheme at 12 o'clock. So this scenario will happen, yes or no? Or if I purchase after 3 p.m, maybe any point of the time I can go at 3:30, I can 3:15. So after 3 p.m. If I have purchased at or before 3 p.m, the NAV of the same day will apply. Simple. अभी किया है तो आज का ही जो NAV है वो लग जाएगा. But if I purchase after 3 p.m, then the NAV of the next day will apply for me. Is this clear? Yes. So if I have purchased or I have switched into a equity fund or a debt fund before 3 or at 3, the same day NAV will apply और वही NAV पे मुझे पड़ेगा. तो मे भी हो सकता है 15 रुपीज का NAV है, so at 15 rupees I will get. But if I purchase it after 3 p.m, then 15 rupees नहीं लगेगा. Today's NAV will not apply. I'll have to see what is the next day NAV. Next day NAV could be 17, so maybe it ended up that I purchased at 17, a little expensive for me. So that way, very simple rules, yes or no. Second, if I am doing, now this was only transactions which were up to 2 lakhs. If I've done a transaction, I've purchased or I've switched into and the value of my buying is greater than 2 lakhs. Let's say I am a big investor, I have invested of worth 10 lakh rupees. I have purchased or I have switched from one scheme to another scheme. I have come in for 5 lakh rupees. So I will come in the second category, yes or no? Now, yes. Whenever such a big transaction is done, whether you've done whether you purchase before or after, NAV of this business day on which the funds are available will be applicable. For example, if I purchased for 5 lakhs, the funds were available on the same day, so that day NAV will apply. But let's say if I have purchased or today I have given a check and the funds were available after one day, so then whenever the funds were available, because it's some heavy transaction, so whichever day the funds were available to debit and it was debited, that day NAV will apply. So for big transactions, they have भाई जब पैसा देगा तभी का NAV लगाओ. Generally when you buy, you have the money. That's when brokers allow, the trading platforms allow you to buy. So that day NAV will only apply. Clear till here? So if I have purchased of 5 lakh rupees and obviously I have the funds in my account, the same day NAV will apply even if I have done after 3 p.m. Is this clear?
Yes.
Now we were all talking about purchase. Now we are talking of selling or switch out. If I sell, then at what NAV will I get? Or if I get out of this scheme, so then I will obviously redeem. I will get my money when I'm getting out of this scheme. So I want my money back. I give the security. So what NAV will apply at the time of selling? Now that is also very, very simple. And it has to be on the same lines only. So if you go to see, if I do a transaction before 3 p.m., the same day NAV will apply. But if I do after 3 p.m., then the next day NAV will apply. Now this is irrespective of the value of the transaction. So when I'm purchasing, there are two categories, but when I'm selling, there is only one category. Is this clear? So let's see, when we'll be doing the sums, so let's say NAV cutoff timeline. We're just taking the cutoff time. So at the time of purchase or switch in, or at the time of redemption, that is sale or switch out, this has two categories. This, if you done the transaction, uh, here you can say if it is up to 2 lakhs or it is greater than 2 lakhs. Here it's pretty simple. What have they said for sale? If you've done it by 3 p.m., then the same day NAV will apply. But if you do it after 3 p.m., then the next day NAV will apply. Next day NAV will apply. Is this clear? This part sale.
Yes.
Yeah, pretty simple. Now coming to this purchase part. Purchase, again they have divided if it is up to 2 lakhs, and so let's take the first category. If I've done a transaction, a small value transaction, so then they will say like this same rule will apply, this X rule will apply. What is this X rule? That if you've done it by 3 p.m., then the same day NAV will apply. Same day NAV. Okay. Or if I've done after 3 p.m. After 3 p.m., then what will happen? The next day NAV will apply. But if I've done a big transaction, high value transaction, then they will say that the NAV of the day when funds available. So normally क्या होता होगा? Funds available है तो ही buy करने देगा broker का platform. So that means the same day NAV will only apply, even if I've done it after 3 p.m. So if I've done before or after, generally the same day NAV will apply because you will have the funds in your account. Is this also clear? For liquid funds are those funds which are kept for overnight or for a shorter duration. So companies which they have to make payment for 3 days. So they bring it in the account. Now 3 days also they are losing interest. So they put in these overnight funds where they can easily redeem it for a day, 2 days, 3 days, etc. So here, if you're purchasing or entering into switching into a liquid fund before 2 p.m., okay, before 2 p.m. and the funds are also available before 2 p.m., then the historical NAV will apply. Now, historical NAV is the previous day NAV will apply. So we'll call it as T minus 1. So the trading day, so let's say if you bought it before 2 p.m. today at 12 o'clock, at 11 o'clock, so the yesterday's NAV will apply. If you have done a transaction and you purchase after 2 p.m. or the funds are available after 2 p.m., then the same day NAV will apply. So the same day NAV will apply. Okay, so you can just make the correction. So before 2 p.m., If you've done the transaction and the funds are also available, then the yesterday's NAV will apply. If you've done the transaction after 2 p.m. or the funds are available after 2 p.m., then today's NAV will apply. So either before 2 p.m. historical yesterday's NAV, or after 2 p.m. today's NAV. So you just want to read the text of it. It is given here. That the cutoff time for liquid fund is 2 p.m. If you invest before 2 p.m. in a liquid fund, you will be allotted the units at the NAV of the previous day. This will happen only if you transfer the funds also before the time. If you miss the cutoff time or you submit the funds after 2 p.m., you will be allotted NAV not of yesterday but of today itself. Clear till here? So you need to make this correction. It's not given that well. Then coming to redemption. So if I have sold the mutual fund, liquid funds, or I have switched out of a mutual fund, then if I have done the transaction by 3 p.m., then the NAV of the day of yesterday's NAV will apply. But if I have done it after 3 p.m., then the NAV of the same day will apply. So here, if I have sold before 3 p.m., if I have sold it before 3 p.m., then the same day NAV will apply. Same day NAV will apply. So how are they written? Just pay attention. NAV of the day immediately preceding the next business day. So next business day preceding that day means today only. So the same day, today's NAV will apply if I have done it before 3 p.m. But if I have done it after 3 p.m., so if I have sold it after 3 p.m., then tomorrow's NAV will apply. Next day's NAV will apply. So how are they putting it? In a very, so the next day NAV will apply. So this is a simple thing you can remember. How have they given? Let's see. NAV of the day preceding the second business day from submission. So I submitted after 3 p.m. today. So 2 days after ka ek din pehle. That is obviously tomorrow. So they just put it in a little confusing manner. So for liquid funds, if I have to make the chart, okay, for liquid funds. Now liquid funds are not important from exam point of view. Okay, they haven't come that much. Now liquid funds, if I'm purchasing or if I'm selling, okay, sale or switch out. Now if I've purchased, the cutoff time they're saying is 2 p.m. So if I've done it by 2 p.m. So they say before means at or before, and here if I've done it after. So if I've purchased a liquid fund before 2 p.m. okay, or by 2 p.m., then yesterday's NAV will apply. So the historical NAV or the trading day minus 1 day, yesterday's NAV will apply. But if I've done it after 2 p.m., then the same day NAV will apply. If I've sold, okay, then again the cutoff time they're going to see is 3 p.m. and I have to see if I've sold it before 3 p.m. or I've sold it after 3 p.m. So this is again by 3 p.m. So even before or at 3 p.m. also this will apply. If I've done it before 3 p.m., then the same day NAV will apply. And if I've sold it after 3 p.m., then the next day's NAV will apply. Is this clear? So very, very simple. Only in the module they haven't given that well. Now coming to the actual sums. Let's see. Now R is holding 2000 units of a equity oriented scheme and 1000 units of a debt scheme. So debt and equity का एक ही था पहले, liquid funds का अलग होता है. On 7th June 2020, he was interested to sell the units. Prevailing NAV of these units are as under. So NAV of 6th, 7th, 8th is given. Now he has done a redemption. He has done a redemption on the 7th. Okay. So he makes a application for selling, that is sale, on the 7th at 2:30 p.m. 2:30 p.m. Based on the information given below, what do you mean by the cutoff time? What is the cutoff time for equity and debt oriented fund except liquid fund? So this is a direct question that they have asked you, the sum. And now they have asked you the sum. What is the applicable NAV in this case? So he has purchased before the cutoff time. What is the cutoff time we have seen? What is the cutoff time? 3 p.m. So therefore the same day NAV will, and the transaction that he is done, we'll have to see the value of the transaction. If it is 2 lakhs or it is greater than 2 lakhs. So he has done a transaction worth how much? So R is holding 2000 shares. Okay, so when it is for redemption, the value doesn't matter. So when he has sold before 3, the same day NAV will apply. So since it is a case of redemption, the same day NAV, that is on 7th, 46 and 34 will apply. Okay, so they have given you the entire table, and here you will have the 46 and 34 will apply. Clear? And I think one more question that they have asked after that: what will be the NAV if the application is made at 3:15? So if he is made an application for 3:15, then what will happen? The next day NAV will apply. So in that case, 47 and 33 will apply. Is this clear? In case of equity oriented, 47. In case of debt, 33 will apply. Now we are seeing the other kind of sums, okay, which is calculation of your NAV value, okay, your total assets less your liability divided by the number of shares. Firstly, we had seen NAV, how to calculate all the investments, recoverables, income, less all the liabilities, expenses, etc. divided by the total number of units will give you the NAV. So let's see this sum and try to solve this. Pretty simple. Firstly, name of the scheme XYZ. Size of the scheme 100 lakhs. Face value is given. Your outstanding number of shares is given. Now outstanding shares is going to be used in the formula to divide. We'll have to first find out the total assets. We have to subtract the total liabilities or expenses, and then we will divide by the total number of outstanding units. This will give me the NAV. So let's see, divided by 10 lakhs. Market value of the receivable, so 180 lakhs plus your 1 lakh plus your receivables, yes or no, less liabilities and less expenses. So once you do that, so you will have your 180 lakhs plus 1 lakh plus 1 lakh again plus and then minus 50,000 and minus expenses divided by 10 lakhs. You will get your NAV is 18.10 per unit. Simple. Now we are going to see the next question. Let's see how much can we do now. Now maybe the grade of the the sums will increase. ABC mutual fund has the following assets. So they have invested, ABC mutual fund has invested in A, N, D, S, C in the scheme at the close on the 31st March 2021. So this much shares they have of this much market price. The total number of units of the schemes are 10 lakhs. So we know that this is the total unit. So we will divide by 10 lakhs. The scheme has a accrued expenses. So this will be subtracted, and liabilities, this will also be subtracted. Now we want to know the total assets. Total assets less your total liabilities divided by the number of units. Yes or no? Will give me the NAV. Now this is the number of shares and this is the market price. So if I multiply, I will come to know the market value of each. Yes or no? I will come to the market value of N Limited. So 25,000 का एक शेयर है, सिर्फ 20 है, तो उनके पास में कितना होगा? I'll multiply and then add up all of this to come to know the total investment in the companies that they have made. Mutual fund, once I add it, then I will subtract with 2,50,000 and subtract with 2 lakhs. That will give me my NAV. Is this clear? So multiplying all of this, I will get this figure. Then whatever I have added, I will subtract with the liabilities. I'll get my net assets divided by the total number of units. I will come to know my NAV. Is this clear? Obviously the calculations you can verify it later on, but you should understand how the sum is actually done. Clear till here? Now we are talking about fund loads. So basically when you buy, let's say you're going to buy a mutual fund, so there is a buying commission that you have to pay, buying commission, and when you selling, again you have to get a selling commission. So on buy also there is a buying commission, on selling also there is a selling commission. Tell me one thing, can you directly buy or you have to buy through brokers? Can you buy directly or you have to buy through brokers?
No.
So obviously whenever you buy from brokers, they will charge commission. Okay, this is called as a buying commission. So this is called as your front end load. Front end load is nothing but a buying commission. So whenever you buy, purchase, that time you have to pay. So for example, if I have it's of 100, okay, then I will have to pay 10 rupees front end load of 10 rupees, and in total I will get it for 110, just like a commission. Now selling, now when I sell also, they have the selling, a sale commission can be taken, that we've sold it for you, let me take a few commission on it. So that is called as a back end load. Now that is called as a back end load, a commission charge at the time of sale. So let's say if I have sold, so this is the first example. Now second, this is the total cost. Now if I have sold worth 100, in my account you think they will debit 100, they will credit 100 rupees, or they will subtract their commission called as a back end load of, let's say, rupees 10. So in my account only 90 rupees will be hit. Is this clear? Front end load and back end load. So at the time of buying, certain commission is charged. At the time of selling, certain commission is charged. Now buying commission in India has now been stopped, and SEBI has told you don't take buying commission. So no mutual fund charges buying commission. At the time of buying, अगर मैं 100 रुपए का buy कर रहा हूँ तो 100 रुपए का मिल जाएगा मुझे कुछ buying पे commission नहीं देना है. Selling पे, sale पे वो लोग commission देते हैं. Clear यहाँ तक? So at the time of buying also they can take some. So the concept is you can even at the time of buying charge commission, at the time of selling you can charge, or you can charge them at both the times. In India, only selling commission is allowed to be taken. Buying commission is not allowed to be taken. But for the sums, we will be calculating the front end load and the back end load as well. Is this clear? A front end load is a commission or a charge that you pay when you invest, and this back end load is where you pay when you sell. Now they have given you a formula for front end load and back end load. For front end load and back end load. Let's see. So it is your public offer price is equal to your NAV divided by 1 minus front end load. Clear till here? So if I just further take it, I'm just trying to understand the derivation or what are they trying to really do. First, for you don't have to understand the derivation, you just have to understand that this is a formula you need to apply from your exam point of view. for the front end load. For the back end load, you have your redemption price NAV divided by 1 plus back end load. Now, I'll just try to explain what this formula exactly is. Okay. Firstly, this is the public offer price 1 minus front end load is equal to your NAV. If I've taken it there, it will be, this would be the case. Yes or no? Now, front end load is actually a percentage. It is a percentage, 5%, 2%, 1%. Now, this percentage is given as of public offer price. So you have, if you open it, you will have this public offer price, this into this, minus iska, let's say 100 rupees hai, and the front end load is 5%. So here you will have 100, and then this 100 minus 5%. So you'll have minus 5 rupees is equal to your NAV. So NAV will be 95. Now what did this signify? ये हाँ क्या exactly? Tell me one thing कि जब NAV कितना है हम लोग ने कैलकुलेट किया. How much is the NAV? 95. But actually when we go to purchase it, front end load लग के कितना ऑफर में होगा? What we means, NAV is 95, but can I give the 95 rupees and get that amount, or I have to pay something more also? I have to pay the front end load also. So for them, the 100 rupees also has to be paid. That 5 rupees commission has also have to be paid, and any buyer will have to pay 100 rupees to get this. This 100 rupees includes the front end load. Have you understood this? Yes or no?
Yes.
Or if I take this, if you just want to understand a little more, if I have to take this 5 rupees there, okay, this 5 rupees there, so it would be something like this. So the public offer price is equal to, that is 100 is equal to NAV plus this 5 rupees, which is your front end load. Yes or no? Yes or no? कॉमन सेंस है, अगर कोई भी चीज 95 की है, if it is for 95, you won't get it for 95. You have to pay the commission amount also. That commission is 5. So therefore collectively the public offer price is 100 rupees. Is this clear?
Yes.
Yeah. Now this is very simple because this was given directly in rupee terms. Since in your exam they don't give you as front end load as rupees, because it will be very simple. You just add it into the NAV and say that this is the public offer price. They have given you as a percentage of public offer price, and that is why this formula is there. So in the front end load they give you as a percentage of public offer price, and that is why you have this entire formula. Now if I have to just understand, tell me whether you understood the formula. Public offer price is equal to, what is the formula? NAV divide by 1 minus front end load. Now this अभी जो दिया है ना, this is as a percentage. It is a percentage of public offer price. ठीक है, हमेशा percentage of public offer price दिया है. So if I have to just derive or maybe further, I'll take the public offer price. ये division में है तो उधर जाके 1 minus public front end load होगा is equal to NAV. When I will further open it, I'll get public offer price minus, now this is percentage of this. So if this is 5% of 100, so you'll come to know front end load in rupee terms, yes or no? In rupee terms is equal to NAV. Now I'll take this public offer price is equal, can also be said as NAV plus front end load. This is in rupee terms. This is your final, if you have to see. तो अगर ये formula है तो उसको further derive करते हैं, so you understand that you will come out to this. This makes perfect logical sense. This makes perfect logical sense. That NAV plus the commission will give me the actual price that is sold to the person who wants to buy. Is this clear?
Yes.
Yeah, so you just have to remember this is a percentage, and once I'm doing this, this is a final figure. एक ये हो गया. अभी I hope you all have understood, so you all should be able to derive the next one, that is your back end load. Now back end load समझते हैं हम लोग. It's a redemption price divided by this. Let's say redemption price, that is on redemption how much money will I get. What formula they have given? NAV divided by 1. What have they given? 1 plus back end load. Now again, this back end load they have given you as a percentage of redemption price. They have given you as a percentage of redemption price. So if I further simplify this, okay, you will have, I'll take it there, redemption price is equal to 1 plus back end load, okay, this is a percentage, is equal to NAV. If I further open it, redemption price plus, अभी अगर सोचो redemption price 100 है और ये 5% है, so then I will do multiplying this redemption price into 5%, you will get 5 rupees. I will come to know the back end load. This is in rupee terms, will be equal to NAV. Yes or no?
Yes.
Further, if I say take it your redemption price is equal to NAV minus back end load in rupee terms. Where further take this, tell me whether this makes logical sense. That NAV जो भी होगा उसमें से बाइंग कमीशन माइनस करके आपको रिडीम होगा अकाउंट में उतना हिट होगा. NAV was 100, commission was 5 rupees. 95 will be redeemed and given to you in your account. That is what we are finding out. Clear till here?
Yes, sir.
Once you've understood these two formulas and just understand that it just looks complicated, but ultimately you just do, understand it's pretty simple. Now we're going to take few examples for this. Okay. Always remember this, when they have given you in the formula, it is as a percentage or as in rupee terms.
Okay.
It is given as percentage. So if I tell you it is 10%, so you will write 0.10. If I tell you it is 5%, you will write 0.05. That's 5%, right? So in the question, they are telling you the price, that is the NAV of TSS scheme of mutual fund is rupees 10. Okay. NAV 10. Public offer price is rupees 10.204. And redemption price is rupees 9.80. Calculate front end load and back end load. So I will first write my formula and then I will do it. Then I will see what I need to do. Public front end load formula. Public offer price is equal to NAV 1 minus front end load. Till here it is clear. I will write my formula, then only I will substitute values. Once I have written the formula, then I will say what is the public offer price. So then I'll say public offer price is 10.204. So लिख दिया ये 10.204. Then I will say NAV. NAV कितना दिया हुआ है? NAV is 10. So I'll write the NAV 10. Then I'll say 1 minus front end load. They are asking us to calculate the front end load. So 1 minus front end load. So then I will take it there. I'll have 10.204 and 10 point this into front end load is equal to 10. Now both number values I will bring it on one side. So I will bring 10 on that side and this on that side. So I will have, or I can take the other way around also. So minus 10.204 front end load is equal to negative this amount, and further you'll do it, you'll get this simple little calculation. Clear till here? So this calculation you can do it is very simple, nothing complicated. All the number values you have to get on one side and this front end load you have to keep on one side, and then you'll have to keep the front end load is your divided by this figure. You will come to know it is this much, 0.02, which is actually 2%. Am I clear till here?
Yes, sir.
Yeah. So once you do this, it's going to be pretty simple, nothing complicated. Again, the other one, redemption price, they have told. So first I'll write the formula, then substitute the values. So redemption price was given 1 plus back end load. I'll take it there. I'll get 9. So 9.80 plus 9.80 VL back end load. I'll keep it here. I'll take this there. I'll come to know 0.02. Then I'll take this into division, and I'll come to know it is 2.04%. Clear? So this is how the sums are there. Now coming to the other type of sums which are further going to test your knowledge, and now this is an exam sum which I can say is the most advanced level because it is covering everything. I expect you all to solve it. Okay, I expect you all to solve it. Let's see. The information relating to one equity oriented mutual fund is given below. So this is as on 2nd Jan and this is as on 3rd January. Now what are they asking? We'll see. First find out, you are required to calculate the NAV on 2nd and 3rd. So they are asking us to calculate the NAV on this day also as on this day also. So I will remember what is my formula for NAV. Add up everything, market value, receivables, accrued expenses, add, accrued income add, accrued expenses, payables minus, and then in the end I will divide it by the units of mutual funds. Yes or no? Very, very simple. Now they are further asking you, okay, let's see. So this NAV part I believe is very, very simple and nothing complicated in it. You can find the NAV per unit. Now further the second part they are asking you, let's see. I want you to think and remember. Ramesh invested 1,95,000. Now क्यों amount दिया है? Because 2 lakhs के लिए अलग अलग है ना, परचेज करते हैं, जब बाय करते हैं तब अलग तरीके से ट्रीटमेंट है उसका. So he's bought up to 2 lakhs and he's bought it at 2 p.m. So which day NAV will apply?
Same day.
Same day. So calculate the number of mutual fund unit allotted to him. So we will have to say that he has invested this much amount. That day NAV कितना था? That is on same day. So same day means 2nd Jan को NAV कितना था? I will this amount 1,95,000 is the amount he has invested divided by the NAV of the NAV of 2nd Jan, because same day NAV will apply. Once I divide this, I will come to know the total number of units that he has. So I'll take this, I'll divide it by 39 and I will get 5,000 units will be allotted. Why 5,000? Obviously अगर A कितने का है, so 1 is for 39 rupees. 1 unit is for 39 rupees. So 1,95,000 1,95,000 rupees, how many units you will get? Yes or no? So you will take 1,95,000 divided by 39, you will come to know 5,000 units. So even you want to check 5,000 units into 39, you will get the same figure. Clear till here? Yeah. Now this is another kind of mutual fund question that they have asked. Now this they have asked based on common sense. This they have asked on common sense as well. So let's be excited to solve this. A mutual fund has shown a NAV of rupees 11.60 at the commencement of the year. Okay. At the end of the year, the NAV increased to 12.50. Should the investor be happy? Should the investors be happy? NAV was 11.60 at the commencement of the year, and at the end of the year it has increased to 12.50. Should they be happy? Start NAV was 11.60 and end NAV was 12.50. So obviously it has increased. Can you tell me how much amount it has increased? How much is the capital gains to the investor?
0.9.
0.9. So it is your 12.50 minus your 11.60 is actually 0.9. Okay, so this is the gain. So they are very happy. Further, meanwhile, the fund distributes 0.75 as dividend and 0.85 as capital gains. So they have distributed further. Okay. Meanwhile, the mutual fund distributes 0.75 as dividend and 0.85 as capital gains. Should the investors be more happy? Yes or no? Obviously, the investors will say we got capital appreciation of 0.9 plus mutual fund has given me a dividend of 0 point, and further they have distributed more of 0.85 as capital gains. Should the investors be extremely happy with this mutual fund? Yes or no? Let's say this is capital gains 1, this is capital gains 2. Double maza. So obviously this is a very good mutual fund. Now let's calculate the return, funds return. Now if I have to see the return, so it's very simple. It is your return upon investment. If I have to calculate return on investment, ROI, have you heard of it? Word. Anytime any person is there, they always calculate the return on investment. इतना डालूंगा तो कितना मिलेगा? So the formula is very simple. Return upon investment. Yes or no? So this is the total returns that an investor gets divided by what is the investment amount. Can anyone tell me what is the investment amount? At what rate did he buy?
11.60.
Very very good. This was the buy price, right? उसने यही price पे buy किया है. So he got capital appreciation, dividend and capital gains as well. So 11.60 is the investment per unit. This is the return per unit. So then I will divide. I'll come to know, I add up all of this, increase in price, dividend, capital gains to then holding period return. If I add up all of this, divide by 11.60 is 21.55%. Clear till here? So any point of time where anybody tells you find out the rate of return on investment, so it will be return upon investment. Clear till here? Initial investment. The answer will be in percentage. Next, they still have a further follow-up question. had these distributions be reinvested at an average of 12.20, what is the return for 400 units? Now what kind of a question is this? Had these distributions, so how much distributions? They're talking about these distributions, these two distributions. The funds distributes. So they are saying this distribution was not done if this or this distribution was reinvested. मतलब ये दोनों को अगर reinvest करते तो कितना मिलता? At an average of, so the investment amount is 12.20. What is the return for 400 units? So let's see. What are they trying to say? That the investment is 12.20 now, and the return that they will get is this. This is the return per unit. Yes or no? If these ये जो पैसा आया दो डिविडेंड और कैपिटल गेन्स, इसको मैंने वापस लगा दिया म्यूचुअल फंड में, ओके, और ऑब्वियसली वो टाइम पे प्राइस वो लोग बोल रहे 12.20 है, 12.20. So then I will say that boss, he has bought how many? 1.60 is the return, and he has bought it at 12.20 into 100 if I do. You understood till here? So I'll come to know how much percentage gain he will get on this also. Now what question have they asked you? Let's see. What is the return for 400 units? So here they are saying that total return he would have received is 400 units would be 640. So here they are saying, they are asking you a different question, that 1.60 he is going to get in hand, yes or no, per unit. So therefore for 400 units, okay, he is getting rupees this per unit. So 400 units he will get 640 rupees, yes or no?
Yes.
Yeah. So this 640 rupees he has got in hand and he is investing at the rate of 12.20. So we will say 640 divided by 12.20. We will come to know that he will get 52.46 units. Another way to look at it is 1 is for 12.20. 1 unit is for 12.20 rupees. Therefore, for 640 rupees, how many units I will get? So I'll do a cross multiply. 640 divided by 12.20. So I'll come to, so they are asking, he will be able to purchase 12.46 units additionally with that return what he has done, and he has bought 400 units. Clear till here? Now sweat equity is equity shares issued in lieu of service. Mehnat. So what is happening? The company is allotting shares to its employees. Okay. So they are allotting equity shares. Till here it is clear? I'm explaining. Yeah. So section 54, okay, talks read with section 2 subsection 88 talks about equity shares. So equity shares are allotted to employees. Is the employee going to give money in return? Is the consideration in money? No. So consideration other than cash. So the consideration is not going to be money. So what could it be? It could be some intellectual property rights, some technical know-how he must be having. So maybe I must be in Google and I must have developed a software. So I'm telling you, you take my software and you give me equity shares in return. So this, when it is done, this transaction, it is called as sweat equity. So the employee must have done some efforts, must be an intelligent employee, must have really developed something against which he is getting equity shares. Is this clear? Concept is pretty simple. Now let's see what question have they asked. Portable Marketing Limited Company, a listed company. Just before I get into the sum, first it's a legal sum again. So you need to know the law. So section 54 is giving the conditions for issuing sweat equity. That is fine. Not anything. In that, they have said that the price of the sweat equity shall not be less than higher of the following. Now, equity shares also will be issued at a certain price. Yes or no? The equity shares also could be worth 1000 rupees. Against that 1000 you're giving value addition. But the price will be there or no?
Yes.
So price of sweat equity is questioned. What happens? They give it at dirt cheap free price. दो रुपए में दे दो. इतने सारे equity shares दे देंगे उनको. And value रख देंगे 2 rupees. So is the value right? No. So they're saying ऐसा भी नहीं चलेगा कि you're giving it in pennies. The value. So they have set the minimum price of equity shares. So the value has been set. Now what is? It should not be less than higher of the following. So higher of the following is the average, low and average weekly high and low of the past 6 months or the past 2 weeks. So there are softwares in place to find out what is the past average price of the past 6 months and also average price of the past 2 weeks. So let's say if this price was 100 and this price was rupees 120. So which figure I will take?
120.
What is higher of the two? 120. So the equity shares, the sweat equity cannot be issued at a price lower than 120. Concept clear?
Yes, sir.
Yes. So now let's read and past 6 months and 2 weeks. Past 6 months and 2 weeks. Again. So now I'll go quickly. They have a paid up capital of this much, fine, and consisting of this much equity shares, very good. The board of directors of the company has recommended sweat equity, very, very good, to its promoters, directors, employees for giving their valuable contribution to the growth of the company. Excellent, good to hear that. The board of directors meeting was held on this date, fine. The general meeting was held on this date, excellent. Okay, and it has approved the sweat equity. Tears in my eyes. The details of the closing market prices are given below are this. So these are the past 6 months, 2 weeks, and the closing price of the equity shares. This has been given on the preceding day, and all of this has been given. Referring to the provisions of Companies Act 2013 and the SEBI regulation, what are the conditions to be fulfilled for sweat equity? Very simple. Can sweat equity be issued to promoters? If yes, then under what conditions? And what is the relevant date in the above case? What should be the minimum price? So again, minimum price was really the sum. So what are the conditions are given under section 54? A special resolution should be done. The resolution should give explanatory statement of who is being given, what they are giving, and listed companies have to follow your special regulations made for issue of sweat equity to list in case of listed company. Okay, then they say yes, can they be issued to the promoters subject to the following? It should be approved by a simple majority in the general meeting. Furthermore, the promoters to whom the sweat equity are proposed shall not participate in such resolution, and the resolution shall be valid for not more than 12 months from the date of the resolution. Within 12 months they have to give it. What is the relevant date? When this past 6 months they are saying, or is from the relevant date. The relevant date kya hai? That is actually the 30 days prior to the date of the board meeting or the date of the general meeting is the relevant date. तो जब भी जनरल मीटिंग रहा उसके 30 days प्रायर इज द रेलेवेंट डेट, वहां से पास 6 months, पास 2 weeks. So they have seen in this past whichever is higher, the price shall not be issued less than 575. Now we're going to see sum on bonds. That issue price of the bond is this much, coupon rate is given. Now this is what they are talking about, we are concerned with, that the convertible into equity shares is 500 rupees per share on the maturity. He had purchased one issue price of the bond was 1000. He has purchased 20 such amount. So his invested amount is rupees 20,000. Okay. At the time of maturity, the market price of the equity share is 400. What options are available on maturity? So on maturity, when he gets this 20,000 rupees back, he will have two options. Either he can go for conversion, he can convert it at the rate 500, or he can take this money, tell the company I don't want in return of 20,000 equity shares, you give me the money, and he will purchase from market at the rate 400. So if he chooses to convert, then how many equity shares will he get? 20,000 divided by 500 is how much? How much? He'll get 400 equity shares. Yes. But if he chooses that don't give me shares, instead give me the money, with this money I will only buy the equity shares in the market because it is available at a cheaper rate. So when he goes for that, how many shares will he get? 500 shares. So on maturity he has two options. Either he gets to convert for at the price of 500, but why would he do that? He can choose to not convert, get the money and buy shares directly. So therefore not converting is a better option. Yes or no? So you should choose not to convert. Now sweat equity is equity shares issued in lieu of service. So what is happening? The company is allotting shares to its employees. Okay. So they are allotting equity shares. Till here it is clear? I'm explaining. Yeah. So section 54, okay, talks read with section 2 subsection 88 talks about equity shares. So equity shares are allotted to employees. Is the employee going to give money in return? Is the consideration in money? No. So consideration other than cash. So the consideration is not going to be money. So what could it be? It could be some intellectual property rights, some technical know-how he must be having. So maybe I must be in Google and I must have developed a software. So I'm telling you take my software and you give me equity shares in return. So this, when it is done, this transaction, it is called as sweat equity. So the employee must have done some efforts, must be an intelligent employee, must have really developed something against which he is getting equity shares. Is this clear? Concept is pretty simple. Now let's see what question have they asked. Portable Marketing Limited Company, a listed company. Just before I get into the sum, first it's a legal sum again. So you need to know the law. So section 54 is giving the conditions for issuing sweat equity. That is fine. Not anything. In that, they have said that the price of the sweat equity shall not be less than higher of the following. Now, equity shares also will be issued at a certain price. Yes or no? The equity shares also could be worth 1000 rupees. Against that 1000 you're giving value addition. But the price will be there or no?
Yes.
So price of sweat equity is questioned. What happens? They give it at dirt cheap free price. दो रुपए में दे दो, इतने सारे इक्विटी शेयर दे देंगे उनको एंड वैल्यू रख देंगे 2 rupees. So is the value right?
No, sir.
No. So they're saying ऐसा भी नहीं चलेगा कि you're giving it in pennies. The value. So they have set the minimum price of equity shares. So the value has been set. Now what is? It should not be less than higher of the following. So higher of the following is the average low and average weekly high and low of the past 6 months or the past 2 weeks. So there are softwares in place to find out what is the past average price of the past 6 months and also average price of the past 2 weeks. So let's say if this price was 100 and this price was rupees 120. So which figure I will take?
120.
What is higher of the two? 120. So the equity shares, the sweat equity cannot be issued at a price lower than 120. Concept clear?
Yes, sir.
Yes. So now let's read and past 6 months and 2 weeks. Past 6 months and 2 weeks. Again. So now I'll go quickly. They have a paid up capital of this much, fine, and consisting of this much equity shares, very good. The board of directors of the company has recommended sweat equity, very, very good, to its promoters, directors, employees for giving their valuable contribution to the growth of the company. Excellent, good to hear that. The board of the directors meeting was held on this date, fine. The general meeting was held on this date, excellent. Okay, and it has approved the sweat equity, tears in my eyes. The details of the closing market prices are given below are this. So these are the past 6 months, 2 weeks, and the closing price of the equity shares. This has been given on the preceding day, and all of this has been given. Referring to the provisions of Companies Act 2013 and the SEBI regulation, what are the conditions to be fulfilled for sweat equity? Very simple. Can sweat equity be issued to promoters? If yes, then under what condition? And what is the relevant date in the above case? What should be the minimum price? So again, minimum price was really the sum. So what are the conditions are given under section 54? A special resolution should be done. The resolution should give explanatory statement of who's being given, what they're giving, and listed companies have to follow your special regulations made for issue of sweat equity to list in case of listed company. Okay, then they say yes, can they be issued to the promoters subject to the following? It should be approved by a simple majority in the general meeting. Furthermore, the promoters to whom the sweat equity are proposed shall not participate in such resolution, and the resolution shall be valid for not more than 12 months from the date of the resolution. Within 12 months they have to give it. What is the relevant date? When this past 6 months they are saying, or is from the relevant date. The relevant date kya? That is actually the 30 days prior to the date of the board meeting or the date of the general meeting is the relevant date. तो जब भी जनरल मीटिंग रहा उसके 30 days prior is the relevant date. वहां से past 6 months, past 2 weeks. So they have seen in this past whichever is higher, the price shall not be issued less than 575